Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, March 27th, 2023. It's now the 25th. We start off in the S&P 500 daily chart into DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell sit-up 2 count. And to negate that for end of day on Monday the 27th, there must be a close below 40.02.87 for the price flip to the buy setup count 1. And the after-market hours closing price on Friday for the S&P 500 was $39.80. So price will more than likely start the day under where the price flip will be. So we'll have to monitor that and give it till end of day on the 27th to see what happens. And if that after market hours price for Friday holds, price could open up Monday above the Ichimoku baseline. New trend factor down levels were configured, and a close below trend factor down 1 for end of day on Monday would qualify that level. Price would have to open above this supply line, which for Monday will be at 39.84.71, and then close above it to qualify it. Same thing for this supply line, which for Monday is at 40.28.40, would need to open above it and close above it to qualify it. However, the one above it, which for Monday is at 40.34.92, would just require a close above it to qualify it. One more bank failure for Monday, and the S&P 500 could qualify both of these demand lines with closes under their levels. And for Monday, the top one is at 38.14.48, and the bottom one is at 38.07.06. And that really happens and keeps moving down, and tag this 50% qualified and confirmed propulsion exhaustion down, then that would lead to the rest of these trend factor downs. Here's 3, 4, and 5, and before that is a qualified demand projection that could stop at around 36.40. Has none of the above and no mercy on us, then it's down to the 100% qualified and confirmed propulsion exhaustion down at that level. And this trend factor down 5 is in the area where the October bottom is, so there just could be a retest in that area and no further. But one would have to wait and see. And again, those are the worst case scenarios. The NYA top color chart shows the NYA to SPX ratio, basically value versus growth, staying under this uptrend line that goes back to late 2021. The next line down here is a support line that goes back to about the same era, beginning of 2022. It hasn't been underneath that level yet, so it has some trepidation about going down there, and there could be inclinations of value getting a bid over growth, but it really is growth that's carrying the day so far. The NYAD line has fallen below some of these falling peaks trend line here. Had a huge whipsaw, is under there, under the 200 simple moving average in red and under the 50 EMA in green, which is above that line in blue. And as suspected last week, growth is carrying the day, but it is really struggling to carry everything. It's just a torturous uptrend here, you can see in the ratio adjusted McClellan breadth oscillator. And NYA price hasn't gone any lower than 14,500 here. It has been testing that level though, but it is holding its own. And the ratio adjusted McClellan volume oscillator for the NYA shows the same as breadth. It's having a torturous uptrend here. And the ratio adjusted summation index of the McClellan breadth oscillator ratio adjusted is below that negative 250, but it hasn't really gone down very fast to approach that negative 500. So that's growth and all the big fat cap megatechs helping it along to not sink fast. Same thing for the ratio adjusted McClellan volume summation index of the ratio adjusted McClellan volume oscillator. It is below negative 500 at negative 673. And our SI14 managed to heave itself above its 21 EMA signal line by a few points, but nonetheless above that 21 EMA signal line. On balance, volume is finding some support down here at this uptrend line. So technology is helping it to not sink below that. And the New York stocks only AD line, you can see the bearish divergence here. The AD line carries the most weight for that type of analysis against its ratio adjusted McClellan breadth oscillator. So it looks like in the thumbnail it's trying to get on board with breadth, and there's a little bit of higher high here. It's just starting, so we have to give that time. And the intermediate term volume oscillator is pulling back on the stick and trying to head back up towards its signal line, a 10 simple moving average signal line. Same thing as the intermediate term breadth oscillator, trying to pull back on the stick and head back towards its 10 simple moving average. And the instruments above their 200 period simple moving average in the NYA is mumbling around the 40 line. It's better to be mumbling than sinking below it, but it does look a bit ominous. But let's see if they can turn this around, the intermediate term volume and breadth oscillators. Maybe we can head back up in a more conservative manner than this. The NASDAQ overbought, oversold indicator chart also includes the summation indexes for the composite NASI and the NASDAQ 100 NDX. You can see the composites summation index is below negative 500 at negative 586. However, the NASDAQ 100 summation index is still at negative 163 and actually trying to climb out of the hole. And the ratio adjusted breadth oscillator for the composite summation index above, you can see the torturous climb it's taking up. Same thing with the NASDAQ 100, torturous climb up after a pretty good jump. The NASDAQ composite overbought, oversold indicator shows the 30 EMA in green, how it would struggle to get anywhere to the upside, and that's really what has panned out from what we talked about last week. The 10 simple moving average in red was at the bottom, and I said, yeah, that's ready for a pop to the upside, so that's what we got. And the NASDAQ 100 has its own VIX, and it's right here, the VXN, and you can see that it's actually headed down So volatility is declining in the NASDAQ 100. And nothing has changed for the NASDAQ 100 high-low index chart. You can see the previous videos for that, but it is definitely still headed straight up. Here we'll look at the NASDAQ composite, which has indications of pulling back on the stick. You can see the Rock 12 planing out here and trying to get back up. And the high-low index itself here in dotted is trying to do the same thing. Almost looks exactly the same as the rock. The 5, 10, and 21 still show no indication of trying to hook around, so those are seriously lagging lines there. You can read about it here. The short-term KST of the NASDAQ high-low is trying to hook around too. It's well below zero and still well below its signal line, but nonetheless trying to hook around, so it's just starting now. Intermediate term still gliding towards the downside below its signal line, below zero. Same thing with the long-term KST. Headed straight down like that, and the signal line is starting to hook around and have a pretty good straight down line there too. So the value part of the NASDAQ composite could have its morning in the sun. Anything past noon, though, I think it's headed back down into the dungeon, or just not making it up very far. The New York high-low index, not as pronounced as the NASDAQ composite high-low, but it is nonetheless trying to pull back on the stick a little bit here. It's planing out. It's at 79.92, basically 80, and getting pretty close to that red line over here, negative 89.29. Again, no indication of the 5, 10, or 21 hooking around anywhere. Again, seriously lagging indicators there. But the index is moving towards the upside. It's trying to hook around. This dotted line is the high-low index. So let's keep a monitor on that. But it's starting as the growth area of the NASDAQ. All the tech stocks are almost getting to the point where they're getting tired of going up. But again, no indication of that in its high-low chart, the NDX high-low. The IWM to QQQ relative performance ratio, I would have never have thought to try to put on a pair trade for short IWM and long Qs, but look at that. Anybody that did is rolling in the money now, and it's getting tired a little bit. That's why I meant the Qs are getting tired of going up. It printed the combo and sequential buy setup 9 end count. I only show the sequential here, and it was perfected. Continued going down, and it printed the combo by countdown completion 13, and there's a aggressive combo by countdown complete also, but however there's still a sequential buy countdown going on, and it's at 7, so it has way more potential to keep going to the downside, this performance ratio. But something to think about, as we just saw in the high-low charts, that value could be pulling back on the stick a little bit. And the 2 to 10-year yield curve is getting a little better. Look at that. It almost made it to 1 and turned around from there and headed back up. So it's 38 basis point difference between the 2-year and the 10-year. And this is shown on a monthly chart, and it's getting close to its 12-month simple moving average at negative 0.33. And the Commodity Research Bureau's CRB index shows it's in a bear market, 20.2% down from the high. However, it's a primary bear market within the context of a secular bull market, so they're not that bad. However, it has gone below that 20% mark again and below this uptrend line, so that's oil doing very poorly. So these primary bears, when they're in the context of the secular bull, are not usually too bad, so I don't expect it to go down any more than 25 it's at now, so I just remeasured it. It's 23%, so I don't expect it to go down much further than that. And gold is getting a little tired, as shown here by the GLD and DeMark. I've noted some divergences from price here to the MACD diff, which is comparable to stock charts MACD histogram invented by Tom Asprey, and the QQE and RSI are relatively the same thing, and they show the bearish divergence. The ROC 1, ATR2, and PPO extreme chart, I just wanted to look in and see how we've been getting literally beaten up and pummeled since late December of 21 with absolutely no let up at all. There were moments that were only for a couple of days where it stayed in the green zone. Other than that, it's just been volatility to the max, day in and day out. And the stocks above their 20 simple moving average in the S&P 500 is making that torturous climb up. Still very well planted in the red zone here. And the AD line for the S&P 500 has halted at this falling peaks support and resistance trend line here. So that's a good sign, as technology is carrying the day and helping to stay away from some of these critical trend lines here in the S&P 500 and the NYA, as we have seen. And the MACD is trying to turn around from well below zero. It did get above its signal line. It's at negative 17.34. RSI 14 in the S&P 500 looks like the NYA's. It's above its 21 EMA signal line and falling short of the 50 equilibrium line. And on balance, volume showed some buying activity for last week. All the technology stocks. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily ongoing supply line here. The bottom of the cloud, 21 EMA, 50 EMA daily baseline. To the immediate downside is the weekly Bollinger Band mid-band 39 period, the monthly 12 simple moving average, the 100 simple moving average, 20 simple moving average, pivot point, and daily cloud conversion line. To the immediate upside is the relative retracement up 1, 200 EMA, R1, and the weekly conversion line. The S&P daily AD line is still under its 21 EMA signal line, and the NASDAQ 100 daily AD line is literally pennies below its 21 EMA signal line. The rock 1 is idling right around 0 in the green zone, 0.56 and pointed up, so that's 2 days in a row where it's just kind of went flat there near 0. The ATR2 has simmered down a bit, still some very large candles for the last 2 days. It's at 74.06 and pointed down. And the PPO extreme is almost to 0. It's negative 0.53% under 0. And the NYSE traditional McClellan breath oscillator to get back to 0 would require 1001 advancers over decliners to get back to 0. So we're fast approaching 2 solid months of trading days underneath 0 for the McClellan traditional breath oscillator. Have a great day.